All right, good morning to everyone and happy weekend to all of us. Okay, today is Saturday, being 7th of October 2023. Okay, we are analyzing every day except on Sunday to make sure that everyone is carried along, and I want us to always make a good profit trading the volatility, the boom and crash, especially good boom and crash. Okay, the ups and the downs, riding the swings, and also catching the spikes. Okay. All right. We'll start our analysis this morning from a crash 300. Okay. So crash 300. Yesterday, it was a wonderful setup that we enjoyed yesterday, and we saw the market taking up and also the market arriving to what we were expecting yesterday. It was an awesome moment, we expected another up to come so that at any of this level we can get a spike. And at the end, boom, we got a spike. Okay, got a spike. After that, it pushed up again, and another spike started. Here is a swing. So what are we expecting from this crash 300 currently? So now we have another down. Okay, so we need to see a what? A corrective structure. Okay, we need to see a corrective structure. After that, another down will come. Okay, so we are seeing the corrective structure playing out. Okay, playing out well. So is it possible for the market to go up again? Yes, there is possibility for it to go up again to give us a regular flat pattern. Then another down will come. Okay, but he might decide not to go up on it. Okay, it depends on the kind of corrective flat pattern he wants to form. Okay, but one thing we know is that another down is actually coming. Okay, so he has given a engulfing candle at this level. If you reverse, it can still spike again. But obviously, I believe that if you go up to break this high, that would be a nice setup. Okay, for us to start coming down, because that would be a good running flat. I mean, a good regular flat pattern as a correction. Then another down will come. So this down, we are taking this down today. Okay, this down. Don't miss this down. Is one of the trade of the day. Okay, so crash 300 is a down. So even if you come up and clear this high, you need to see another down. Okay, that's for crash 300. All right, so we have boom 500. Okay, this is the 1 minute, which means if you see this first corrective structure, another of this 1 minute. But let's look at the 15 minutes to see the a little bit bigger shape of this crash 500. Okay, so let's bring it well. Okay, you see the market started pushing down from this high. This is a wonderful top notch yesterday. Boom, boom, boom. Market was like, wow. Wow, wow, wow. So, like I told us yesterday, we targeted and we started hitting the spike down seriously. Though at the time, it was trying to, do some funny stuff, okay, because this impulse corrective structure as a running flat pattern and another high. So he started doing some changes. I said, like, this market, this one you're doing like this. Are you sure you are okay? Okay. So he went down, clear this counter trend line. Okay. And once he cleared this counter trend line, boom, is a confirmation that more down is expected. And he even came back to give us discount. Can you imagine? That this discount continued down and did the corrective structures here, more down. So we saw this market. This is the first impulse against the trend, okay? This downtrend. So what are we expecting? So after this corrective structure, another up is expected. So looking at it like this, okay, so we are expecting another up, okay? But could this market still go down? Yes, this market can still go down like this to give us a down last wave, okay, like this. So this will be a nice structure. After that, then we expect this boom up again, okay. So that is what we expected, okay. But on the small time frame, which is 1 minute, why do I say that 1 minute will push up? This is a 1 minute push up. So look at what we are strategizing. Okay, this is what I want us to see so that we'll be able to know what this market really wants to do. So this market possibly might, after this going up, can still come down to give us clear structure here. Once they give us this low, boom, we are good to go up, okay? We'll start seeing ticks, but remember it's ticks. So if you enter here, put your stop loss below here. But that is ticks coming, okay? So ticks is what is coming. Okay, so let's come down and see this market down here, then we can take it up, okay? All right, crash 1000, we can see that this crash 1000 on 15 minutes is the impulse, okay? And on this impulse, that impulse, corrective structure, you want to do another impulse. And if we cash you at this level, oh goodness, this is a nice place to catch this market. If this market eventually enter into this zone, we are taking another down. We are taking another down. After that, we can do parallel. We take out our trade and expect the market to continue the up move because the market will still take an up move. Okay, so that is what we're expecting on boom 1000. It's also a nice market spike today. All right, we have boom 300. Obviously, we know that boom 300 did a corrective structure here and start pushing up. Boom. So we saw this structure and we know that this market will still go up. Okay, even on a bigger time frame, we kind of see that the market still needs some up to through. So what we'll be expecting here is a corrective structure, which is already imprinting himself. Okay, so we'll get to see a corrective structure here. After that, more up is expected. Where can you get that corrective structure right? On 1 minute. Okay, on 1 minute. Just take a check pill, monitor the market on 1 minute. So once you see the structure form fully on 1 minute, then you take a position to spike, take the market up. So you can see this down, corrective structure. If you do another down and they break the counter trend line, then up move has started. Okay. That is for boom 300. All right, so let's look at boom 1000. Sorry, boom 500. Okay. This is boom 500. So I think this market is doing down corrective structure for another down. So after this down, there is a possibility for market to do what? Push up again. So we need the last push up before the market will start going down. Because for this down, there is another down we're expecting, but we need another up because this is a corrective structure. So we need the market to push up again. Okay. The last high it will do, boom, then we'll target the down. Okay, so but the up is what we should target. All right, so look at this page. There's a neckline here. There's a neckline here, and there is a zone also there. So the challenge here is that will this market respect it from that zone? Let's look at 30 minutes to see if there is something zone here. Let's look at 30 minutes. Okay, so looking at 30 minutes, we see that there is a zone down here. I don't know if the market can get down to this place patiently enough before it will start going up. Nevertheless, we have 1 minute to follow too. So 1 minute time frame is what is necessary or is important. If this market starts spiking, because I'm not going to say it may spike here or it might start spiking here, but one thing I know is that this is a three-way structure. Okay, so I have spotted this three-way structure, this high and this high. So drawing counter trend line. So anytime the market spike and up to this, above this area, I will position trade for a buy. That means the market will continue going that buy. We're expecting to see this buy. Okay, we take it. But if the market patiently continue going down to enter this zone, this area, that is our, because it's a clear this zone too. So that is our best area to buy. So if you can get it here, fine. But if you didn't get here and a spike above this counter trend line, enter your trade and ride the next up. Once you go above this height, take out your trade because anything can happen. All right, finally, we look at 1000. Okay, on 1 minute, even on 15 minutes, we can see that is a structure, okay? Because it's a structure that market possibly might push up, but if you didn't, it can take you out. If you enter this trade, you can take it out here from a minimum and a calculative stop loss, okay? But let's look at 15 minutes. Let's see what we are targeting, okay? If there's anything that has to stop this market on 15 minutes, obviously we are trying to do a corrective structure because this is fast down. So after corrective structure up, another down will be coming. So, but let's look at this up, this where we're targeting an up movement. Okay, this 15 minutes time frame. There's an engulfing candle around this area. Yeah, in this market can got a rejection at this area, though it has rejected before. But if you can get it here, very nice. That will be very fine. The market will push up. One more push up will option out. Okay, let's look at 30 minutes time frame to see what this thing is doing here. Okay, 30 minutes, there's no engulfing. But there is on 1 minute, and it's already on 1 hour, and it's already on 1 hour engulfing. This is the 1 hour engulfing, so it's already inside. So what we do is we follow the 15 minutes, and if the market got a rejection there, boom, the market will spike. So if you enter this zone, you can take a trade, put your stop loss below here. If it spikes, fine, then you take the right, the next for this up, you take another out. But if that did not happen, to take you out of what? Out of a small loss. Right, so that is for the 1,000. Then let me give us a bonus on volatility 25. Volatility 25, we have an up push expectation on volatility 25. So we're expecting market to push up on volatility 25 because of this bullish engulfing on a daily time frame. So looking at this, we see this market as sharp as it could on 15 minutes. See, it's very sharp as it could. There is an engulfing here, and the market tends to retrace on it. So we are expecting this market to push up, obviously. We're expecting it to push up. So it is our entry here. It's very, very interesting that we enter the market here. Okay. So we can enter the market at any level here. This the structure, we have an engulfing candle like this. Okay. Okay, so we'll now be trying to, take the market up. If you're lucky to get it above, fine. That will be very, very interesting. If you're lucky to get this structure like this, okay, that will be very, very interesting move. So let's take the opportunity around the market to make a good profit. Okay, so the 1,000 has finally spiked. It has finally spiked. You see it here. So they are given an engulfing. If you closed with this engulfing candle, then if you come back on it, it will spike again. So let's take note of it. Okay. All right. So that will be a wonderful one for today. Target our trade. Remember, target this. If this one went up, more down. Target our this too. If it went down, more up. Target our this too. Okay. If you get to this zone, the trade of the day. Yeah. Target it. So we have crash 1,000. You see, crash 1,000. I mean, boom, 300 is okay. It's still going down. So this is a wave. Okay, after this, we'll draw a transaction line and write it up. We have this. So if this enter here, fine. If we didn't break this, we write it up. And the 1,000 has started spiking. So we can also write it up together. And lastly, this. So let's take advantage of it and enjoy the market. All right, thank you very much. Have a successful trade day.